Good evening. Ira Epstein of Linn Associates with your financial market wrap-up. And this wrap-up is for Wednesday. And we're at the 11th of August, 2021 at 6:20 p.m., and that is Central Time. Interesting day. The CPI figure was the story of the day, and it came out moderate. Now, I think it's going to pick up a little bit because of rent. Rent makes up, I've read recently, about 30% of the CPI in the United States. So if that's the case, and we're hearing rents are going up and people are moving back into the cities, I see it all around where I live. I live in downtown Chicago for all purposes. And Board of Trade I can walk to from my home. Does that give you an idea? If I want to walk and see a Bulls game, it's about 4 blocks from where I live. So it's very convenient where I live. And around me, it was very empty during the COVID, and new buildings were going up. They fill like this. I don't mean that they're on the market at any time. They fill like that. And I'm watching what small studio apartments, this sounds crazy, just gives you an idea of CPI in Chicago. I think these are 400 feet. Now think of what I'm saying, and I think they start at $1,500. So I'm just taking, that's moderate building. That is not a high-end building, but it's also not what you'd call a C or bad building. It's brand new, all the amenities are pretty, but it's primarily younger people. They don't even own cars, most of those people. They'll take Uber and public transportation and Lyft, whatever it is. So just gives you an idea. City life is different, but now that's what's going on. I did notice they're giving a month's free rent in it as I walked by the sign the other day. And there are other ones here that you can imagine the rents are just astronomical. I'm just giving you what a 400-foot new apartment goes for. Okay, let's get away from that. Clothing, auto repairs, there's a whole slew. I write about them tonight in my report because the good news was in it, and that's the reason the stock market, the NASDAQ, rose today. The market didn't see a reason for the Fed to get overly eager. Things aren't that hot. They've settled down. So that surge of coming out of the pandemic where everything rallied, we're backing off. We're looking at a 5%, 4.5% gain. It might stay like that for a while, but you get past a certain point and things back off. That's the important part that I'm making. When we take a look at the S&P 500 index, you are at record highs. You are up just 0.25% for the week going into, right now we're in Thursday's trade, and that's where you're sitting. When you take a look at what's going on, remember what I told you, you're losing that volatility. Well, when you get no volatility, be careful. And quiet markets have a way of spurting on you. I know that sounds nuts, but that's what I've learned in my career as this goes on. What's the trend? It's clearly up, higher lows, higher highs. Where's the resistance? Well, it's not above the market on a moving average. They're all below the market. The number I wouldn't want to see taken out is 44.12 1/4, because that would break the pattern of higher lows and higher highs. And I like to see that formation. Where's the resistance? 44.64 now, the upper Bollinger Band. You went up today and did hit some of the window envelopes, so something to pay attention to. But this is what I think has got the market moving. The embedded slow stochastic. So that combination with the market holding this pattern, the pattern doesn't matter as much as this. There's a hierarchy of indicators. Now you're going to set your own, I set mine, and I teach them a certain way. And in what I teach, I won't tell you the whole hierarchy here, that's why you take the charting course, but when you embed, I don't know any number that is stronger than an embedded number. When you lose it, it's like snap, crackle, pop. The momentum is gone and the market likes to back off. If you had an embedded reading on the downside, same thing, then it likes to rally. So until it's gone, I continue to look for buying in the market, but I'm very aware that ranges have narrowed in rather dramatically, and I'm aware it's a long rally. In the NASDAQ, let me point out what I was showing you. This was Tuesday, and I said, watch out, you got a reading under 80. Now, unless it regains getting over 80 right away, the next day, often the market's telling you it wants to break down. And wherever the first major moving average is, if it's breaking down, is often where the market goes. You tell me what it did. It's exactly what it's done. What's the pattern now? Well, now you have no pattern. You have a higher high, lower low, and you have a market that's got to work off an overbought condition. So I look at a market that's going to get caught in the Bollinger Band, top and bottom here, and drift around now. I could be wrong, but when I don't see a trade pattern, I have nothing wrong with talking to you because I don't see anything to be done. In the Dow Jones, have you taken my enhanced Bollinger Band course? Okay, tonight's high is 353.91. Your Bollinger Band top is 354. Let's call it 02. Yeah, I think we can do that, just round. What should you do? Take the course. What about the Russell? Well, the Russell is overbought, not trending. You have a higher high, lower low. I've told you for, I don't know, here a week or so, that the battleground is shaped up to be the 100-day average for whatever reason, down to the 18-day average for support. If it can clear this, then the Bollinger Band at the 2260.50 becomes the new resistance area. I don't think it'll stay long over the Bollinger Band. Okay, period. Do I think there can be rotation in markets? Yeah, I keep seeing so many people. I was watching one person today on CNBC talking about this, saying this is all a base. I just don't see that as a base. I don't know what he's seeing. He must be looking at weekly charts, something else. I don't know. That's not a base. That's a market that's doing nothing. Maybe he just thinks, well, it's a low level. Well, people have been saying that all year and it hasn't gone anywhere. In the VIX cash, you have lower highs, lower lows. My statement yesterday, and I'll stick with it, as long as this number's dropping, you're probably going to get a rally in the stock indices. And you're getting that. The NASDAQ not today, but you got it in the other three. Are you embedded? Yes. What could hurt this market? Today's high, if it's taken out, which was 1709, if that is taken out, the odds favor you're going to make a run back into this, the 1805 to 1813 area. Let's talk further. If the market drops down to this number, what do I think the pros are going to do? It's not a trade for everyone by any stretch of the imagination. I think they're going to write puts, just like they did back here, looking for the market to get back to the 18-day average. When you hit the upper Bollinger Band, it takes guts and a lot of money to hold on. I think they write them up there, and they're looking for them to come back down there. And that has been going on. Do yourself a favor. Go back 3-4 years on this. Take a look at what you're saying. Do you get these spikes on the upside? Absolutely. You don't get as big a spike on the downside, and that's because you're already at low levels in it. That's what I'm saying. In the 30-year bonds, the market went from an upper Bollinger Band, then went back up, challenged these areas to the lower, and you're holding. So where do we go on interest rates with a pattern like that? I don't have any idea. I know that today there was a 10-year auction, and as the numbers came out, I was watching Rick Santelli on CNBC, and Rick said this has got to be the best 10-year auction he's ever seen. He didn't think the people that bought it were in the right, because he got off the air and said, and I was listening to him, I don't know if they're looking at the chart action. I think those that were looking at Bollinger Bands knew just what they were looking at, and that often is an area the market tries to hold, but somebody thinks a 134 number is a good number to get. And this were not the brokers themselves, so these were indirect bids, which was interesting. In the dollar index, you're overbought, very close to the resistance point, an outside day to the downside. Maybe you want to retreat back to the 18-day average to find support. Very possible. What I can't see on this chart is a good area in risk, period. Forget reward, in risk. Even if you bought the 18-day average, you got to risk the market all the way down to 91.82. I wouldn't have you do that. In the eurocurrency, I can't turn that off, so I'm going to just let that ring. Lower highs, lower lows, the flip-flop of the dollar, and now it looks to me like you're going to get a bounce. The September British pound, lower highs, lower lows, outside day up. So until today's low is taken out, and I apologize for that, I think that the market at 138.03 is trying to put in a trade bottom. It's not a trend. The trend is still down, but the bias is up. The market has not been able to close under the 18-day average, and you have corrected an overbought condition. That's how I look at the market. August Bitcoin, well, this is now the 100-day average. You got over it, and I think I was very clear. I told you as you got up here, I don't care what it does, that's where I teach. That's where I think the smart money got out of the market. Now you're embedded. What portion did they get out? They don't have to get out of everything, but I think they have to take money out of the market up there. And now they'll be looking on the market on pullbacks for support. 45,050. It's not like it's a little bit. So if you got out up here, it was 46,000. Now I'm telling you, I'm looking at the 45,000. So to you, it might not be much money, but for a lot of us that look at it, $1,000 is $1,000. If the red line closes under 80, then I think you're headed back down here. This is all based not on a trend. This is based on, in my opinion, the slow stochastic. Now look at what's happening with the differential suddenly of the Brent versus WTI crude. It has suddenly come in about 30, 40 cents on you. That hasn't changed the trend. You're into resistance up here. But again, here's the market. What do I teach? First challenge, just what I told you on Bitcoin. The 100-day average and the Bollinger Band, I don't care if you had an embedded reading or not. It's where I think the pros are going to grab some money. Now, the resistance in this market's pretty clear. It's the 18-day moving average of closes. If you hit it, that's where I think the pros will hit the market, with stops over that high, looking to come back down here. Doesn't mean I'll be right. That's what I think they're going to do. Same thing in the October WTI. I look for the resistance, 69.83. In this market, this was the high that you had of 69.87. So I think you're going to get some traders that try to come into this market. I know it sounds crazy. They're going to risk just a few points to see can they get right that type of trade. Gasoline, battleground, shaping up bullish again. I've moved to the October now. It's time to not trade, in my opinion, the SEPs. Move to the October. Trend is up. Bias is up. You might be going at 221.60 in the market. So you put it together, you come up with game plans, and that's what we try to give you. You know, we're brokers. At the end of the day, you look at me as somebody in the research, and I know I have a big following out there for this and what I know in it. But you do understand we are commodity brokers. We offer great rates and phenomenal research. Besides mine, our firm writes a tremendous amount. They publish written reports, price counts. They cover all these markets in detail. Option strategies. I'm not an options trader. These people are. They really can set you up with the knowledge that they have. So if you'd like to see it, it's for free. Just give us a call. All you have to do is go to the website, sign up for the free offers you want, and we'll put them into your email box. I'm Ira Epstein. You have a good day, and I'll see you tomorrow.